Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, coming to you live from Exchange in Miami. Joining me for this segment, we have Magoon, CEO of Amplify ETFs. We're going to discuss where the digital transformation opportunities are. Christian, it is great to see you as always.
Yeah, great to be here in Florida with you.
Welcome back to TradeTalks. Let's talk about cybersecurity, of course,
Yes.
one of the most important topics in the marketplace, not just with ETFs, but in general.
That's right.
Tell us about Hack, the first cybersecurity ETF to launch in the US.
Yeah, so we're excited to have Hack at Amplify now. It's a NASDAQ-based index of cybersecurity companies. And the big news is the index has changed slightly. The industry has matured. So now to be eligible for the index, you have to have 90% or more of your revenue from cybersecurity. When the fund first started almost 10 years ago, you only had to have 50% of your revenue from cybersecurity because there weren't as many pure players. But now there's so many that you can actually have a very high revenue threshold. So this is the purest way to invest in an ETF in a basket of cybersecurity stocks. And we know cybersecurity is like a utility today. You have to have it as a person, a company, and a government. We really see that as kind of a theme that has a lot of legs here, unfortunately due to some of the geopolitical turmoil we're experiencing as well.
What about transformation as it relates to consumers and how they're using their devices for payments? I mean, payments is another big one.
It's amazing. I mean, when's the last time we touched cash or wrote a check? I mean, maybe our grandmothers or our grandfathers are doing it, but we're using our devices today to pay for everything, and we're more comfortable with bigger purchases. So we have our mobile payments ETF, iPay, which tracks a NASDAQ index that we think is a great way to play this entire ecosystem. And what's next for this ecosystem? Probably some of the crypto payment mechanisms and tokens. So the index should adapt going forward to those types of technologies. So if you don't know which payment area which stock or whatever to play, here's a way you can kind of shotgun the space and own kind of the best, if you will, payment companies that are really digitally focused.
And of course, a key theme at Exchange is income. Everyone's talking about active income and so forth.
Absolutely.
Why though? It's multi-asset. It's not just one particular class of fixed income.
Yeah, so it's an index of closed-end funds, 45 of them. Some are stocks, some are bonds, some are multi-assets. The big thing for income investors is it pays a distribution rate of a little over 12%. And it's because these are income-producing closed-end funds that for the most part they're trading at discounts below their NAV. So you're buying them on sale relative to their NAV. So that combination gives you this really nice income stream. And many investors, 5%, maybe cash rates, aren't cutting it. They need more income from their retirement portfolio. Adding a little bit of a 12% yielding ETF like YYY can really change the dynamic and meet their retirement income needs.
And as you look out into 2024, whether it's industry trends or just larger macro outlook, what are your thoughts as we get through the rest of the year here?
Yeah, I think the Federal Reserve is going to be really focused. Whether or not we get a rate cut in March seems like we're not going to. So I think investors need to be balanced in their view. There's a lot of cash on the sidelines. Optimizing that kind of and making sure you're getting as much yield you can from your cash on the sidelines while not taking a lot of duration risk is going to be important. On the equity side, I really think being diversified and not getting sucked into the Magnificent Seven is going to pay off. Right now it's painful if you don't have that exposure, but I think over time in this market cycle with where rates are going to go, which we think is going to be lower this year, that the breadth of the market is going to get larger, and that's going to benefit many of these stocks that aren't part of the Magnificent Seven, and I think over the long term that's going to be great for investors' portfolios.
All right, Christian, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me from Exchange. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.